Today, I want to share with you some thoughts that I've been having, thinking about, and as with all big thoughts, right, it begins with a story. I want to take you back to 2006, just 10 years ago. We were experiencing something that as a nation we had never experienced before. It was about a 4 or 5 year period leading up to 2006, where all of these new home buyers were entering the housing market. President Bush began selling this notion that everyone should have a house. The initiative was called A Home of Your Own, and banks were more than happy to oblige. And what was created and pushed into the market during that time period of early 2000 was a product of bad debt called the subprime mortgage. Subprime, of course, meaning below average mortgages, right? You have sub-zero weather, below zero weather. You have subpar grades, below average. And that's what these were. They were complete junk mortgages. And what the banks failed to see up to that point was just how junky and dangerous these loans were going to be for people. They approved folks for way more house than they should have been approved for. They gave people with terrible credit home loans, and they even approved families with no jobs at all. And then by 2007, we inevitably saw these adjustable rate mortgages start to adjust upward. People's interest rates jumped dramatically overnight. You had people's mortgages literally doubling in price in a single day. And what we witnessed was this massive default running through the entire neighborhoods, entire cities. We saw foreclosures from horrible debts that never should have been issued. And why would the banks go ahead and make these loans? Well, they believed at that time that homes were always going to go up in value. And they also banked on two other things. One, they figured if people can't make their mortgage payments, they'll just get the property back, resell it for even more profit, and then collect massive fees for these loans up front. Or they didn't even really think that far in advance, because the reality was they were reselling these mortgages to investors faster than hot potatoes, right? These were those collateralized debt obligations that we were hearing about. Just a package of ton of bad loans sold off to investors, stamped with that AAA awesome rating, even when they were complete trash. So they didn't even care if we were all foreclosed on, because they were passing the problem on to the next guy. So then everything starts to come undone. In 2007, panic starts to unfold. Banks and investment banks are left holding millions and millions in bad loans, and homes are basically worthless. And we have this major crisis, and then in 2008, a fall, we see banks stop lending altogether. So what was the answer in the fall of 2008 when all that bad debt fell apart? Well, the answer was not reform. In fact, it was more bad debt. What we saw and what we're still witnessing is called many different things, but at the end of the day, it's bad debt. It comes in these names: quantitative easing, bailout, stimulus, simply the process of printing or creating more money to pay off all of that bad debt. Free money. And who doesn't love that? But again, free money not based on anything real. So to pump up the markets, fix the car companies, fix the banks, we printed and created and printed some more. So that when the recession started in 2008, we went from a dangerous $9 trillion in debt to now in over $19.5 trillion in debt. And what's been known as zero interest rates have not helped at all. We have penalized savers, and we have incentivized more debt. And there's multiple ways of looking at this crisis. But one of the really small ones that recently caught my eye was this from the Wall Street Journal. U.S. auto sales break records for 2015. At the exact time that was printed, every newspaper was writing this story. Nearly half of U.S. citizens cannot come up with $400 for an emergency. So how is the automotive industry selling so many of these cars? 0% APR junk loans. And where we still have a subprime mortgage crisis, now we have a subprime car crisis. Basically, this great boost in car sales is only held up by a few $1,000s of actual money exchanged for a $30,000 or a $40,000 car purchase. It's a fallacy, right, that growth is actually happening. Anything to keep the economy moving, free money, free money. And what about the stock market going through the roof in the last couple of years? Isn't that a sign that the economy is doing awesome? What we should have seen, right, is this massive jump in people opening IRA accounts or watching more people investing in their IRAs these last few years. But graphs that I have seen from the Federal Reserve actually show how our debt is moving in exact time with the stock market uptick. We have a debt-fueled stock market. Companies are reinvesting this money in their own stocks. This is simply, once again, printed money, not a sign of a growing economy. It's a propping up by debt that's showing these wonderful returns. It's, in a word, overvalued. I bring this video today to simply voice my genuine concern with where I believe that we are right now in this $19 trillion state. I think we really need to think about where this inevitably is going to bring us. We all know that we're in a global economy. So who currently right now is in a recession or just on the brink of recession? Brazil, Venezuela, Taiwan, Ukraine, Japan, Argentina, Greece, Russia, Finland, Switzerland, Mexico. And Reuters has a quote from the ruling Communist Party themselves, China, right, saying, this world's biggest economy, they're basically saying that they're going to suffer even greater economic crisis if the government, quote, relies on too much debt-fueled stimulus. Why do we think that we're going to be exempt from all of this? Some of the greatest U.S. economists from the biggest institution, as well as former heads of our own government, are pointing to an extreme downturn, although the Fed and the Treasury are giving the thumbs up, just like they did in 2008. I simply want people to take a look at this. View things with just a little bit of skepticism when you hear that everything is looking great and Americans are not able to come up with even the smallest amount of cash. And where most of us understand the importance of management of our personal lives, we need to understand the importance of what fiscal responsibility looks like on a larger scale and what the economy will inevitably do if we don't change our policies. I think it's past time to have an honest discussion of how free money puts us all in a dangerous place. That's my big idea. What do you think?